Hey everyone, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple, please be sure to follow and hit the 5-star rating. Okay, folks, huge news coming out of the White House. So today, White House economists released a report that stated that stablecoin rewards won't harm banks. This goes in full contradiction to what the banks have been saying, that there's going to be bank runs, they're going to lose deposits and much more. But when you look at the platforms and the people who are leveraging stablecoin rewards, it's the early adopters, right? It is not the average Joe and Jane. There are literally hundreds of millions, even billions of people who have not touched anything with crypto. They may have heard of it, but they have not invested in it. So as we've talked about ad nauseum, this is simply the incumbents, the banks, seeing the disruption at their doorstep, and they're trying to slow it down because many of these banks are looking to launch tokenized deposits as well as stablecoins. The problem is they don't like that you can earn higher yield, right? They want to continue to get the big fat bonus checks while they give you breadcrumbs, 0.01%. And they don't want to compete. So that's why they've been holding up the Clarity Act, trying to relitigate the Genius Act, which is the stablecoin bill, which has become law. So really great that the White House is coming out, putting out this report and disproving the statements by the banks. So this is huge. And you can, of course, read this through. I'll put a link to the full presentation in the description, but this is big, guys, and it really shuts down the bank talking points. Of course, they're not happy about it. Eleanor Terrett reported that bankers say this has never been about simply needing more deposits to lend. It's about outflows, particularly from smaller institutions. The issue is more about how shifts in deposits shape how lending is funded, priced, and how stable it is over time. But again, if they offer a competitive rate or they launch their own stablecoins and offer rewards, the customers won't need to do that. But of course, this is not about that deposits fleeing. I don't think the average Joe and Jane going to the community bank is about to go put a ton of money in stablecoins and earn rewards, right? Many of them don't even know about it, right? It's usually the older demographic. So these banks, their talking points are missing the mark here. But look, disruptions here, innovation, progression in technology always wins. Yes, are the incumbents going to fight? Of course, right? You know Jamie Dimon doesn't like this. He's been anti-crypto, anti-blockchain for a long time. He's now bending the knee because he's losing, and the banks are going to lose here. So even if they win, the battle here a little bit, they're going to lose the war because consumers over time are going to get educated and they're going to go to institutions and places where they can earn more. Now, here's what Johan Kerbat, who I recently had on the podcast, he's the head of crypto at Robinhood, said about this report. He said, today's White House report reinforces something we've known for a long time. Stablecoin yield is a meaningful consumer benefit. This isn't about replacing the traditional banking system, but about offering greater choice and opportunity. The data also confirms that blocking stablecoin yield hurts consumers and does very little to protect bank lending. Our mission is to democratize finance for all is stronger than ever. We'll continue to advocate for and build accessible products that put the power of modern finance into the hands of the many, not the few. So this is really great statements here from Johan. And be sure to check out that interview I did with him recently. And on the note of the Clarity Act, Treasury Secretary Scott Bessent calls for Congress to pass the crypto market structure legislation before it gets too late. He said time is scarce and now is the time to act. So he's right. We absolutely need this done because, guys, it's an election year, midterms, right? And plus you have the summer recess. If we don't get this thing moving somewhat this month and then by next month start to progress further because there's a markup and then it has to be voted and all that, we're going to run out of time and it's not going to happen. But this is a big win here with the White House coming out with this stablecoin report. And it's going to be hard for these banks to go up against the White House, right? Especially as Trump has threatened these banks. He has posted about this situation on Truth Social. So it's not looking too great for the banks here. Now, on the topic of the Genius Act, yesterday we talked about the FDIC, looking into this and how they can implement this and much more. Well, the Treasury is moving forward with Genius Act, focusing on illicit finance. So, payment stablecoin issuers in the United States will be required to implement a regime targeting illicit finance under the proposed framework for the Genius Act. In a Wednesday notice, the U.S. Treasury Department said its Financial Crimes Enforcement Network and Office of Foreign Assets Control had issued a joint proposed rule to implement provisions of the Genius Act signed into law in July 2025. The proposal would direct stablecoin payment issuers to establish and maintain an anti-money laundering (AML) and counter financing of terrorism program, maintain a sanctions compliance program, and have the ability to block, freeze, and reject certain stablecoin transactions. Issuers would be treated as financial institutions for purposes of the Bank Secrecy Act. So, folks, this is certainly something we need to put into place. We want to stop bad actors. We need to make sure the guardrails are in place, right? We can't have bad actors using this technology and manipulating people and committing all types of crimes. Same way we do with other assets and other currencies and things along those lines. So this is really great. The one thing we need to make sure we watch out for is that these guardrails also protect our rights. If you want to investigate someone, you need to get a warrant, right? Just like you do in other aspects of society. They can't just go look at the data, right? We've seen what the Patriot Act and all these things have done. So we got to make sure our rights, the right to privacy is protected here. And this is something I'll keep watching. I'm going to have Chris Giancarlo on, founder of the Digital Dollar Project, because this is something he's highlighted in the past. We've talked about. I'll be interviewing him next month. We're going to talk about all things stablecoins, CBDCs, the CFTC, and much more. So great to see these things are being put into place, but you got to watch the details, right? The devil's in the details. Folks, this episode is brought to you by iTrust Capital, which makes crypto investing via an IRA very easy. So iTrust Capital allows you to invest in over 90 plus crypto assets, Bitcoin, Ethereum, XRP, Solana, and much more. And you can also get access to stable coins like Ripple's RLUSD or Circle's USDC. Plus, you can invest in gold and silver, so you have access to precious metals. And by investing via an IRA, you get huge tax advantages. You can buy and sell these assets 24/7. It's low cost, no monthly fee. And for the gold and silver, it is not paper gold. It is not paper silver. You can actually redeem these physical assets. So not many platforms offer this. So iTrust Capital is offering a great option here. They also offer a great custody solution called Premium Custody Account. So they use Coinbase Prime, which BlackRock uses. They use Fidelity, they use Fireblocks, and many others. So you're getting tier 1 level custodial services. So this is a great option for safely storing your assets. And they use a closed loop system. So if anyone hacks into your account, they can't withdraw any funds. And I believe second to self-custody, this is the safest way. Obviously self-custodying your assets where you control the private keys is the number one solution, but this is a great option because they're using, again, the institutional level custodial services where everything's buttoned up. So folks, iTrust Capital offering some great solutions. If you sign up with my link, you can get a $100 funding bonus. I have an account with them, so check them out. Again, great option with the IRA as well as the custodial services. So go to itrustcapital.com/go/thinkingcrypto. The link will be in the description. Okay, folks, today Morgan Stanley's Bitcoin ETF went live and it logged $34 million in first day volume. Now, obviously, Morgan Stanley late to the game here, but better late than never. And, we've talked a lot about how these firms are capitulating. They're getting a lot of demand from their clients who want access to crypto. They want to get exposure to Bitcoin and altcoins. And as always, it starts at Bitcoin and then they're going to do the altcoins. We saw it with BlackRock, we saw it with Fidelity and others. So they're going to go down the list. So this is really great. So the expectation by Bloomberg senior ETF analyst Eric Balchunas was 30 million. So it went to 34. So it exceeded his respective target. And according to data from Yahoo Finance, the Morgan Stanley Bitcoin Trust saw 1,658,176 shares traded on Wednesday, closing at $20.47 per share. So really great to see this, guys. The on-ramps being set up for retail and institutional capital to come into the market, and wait till we get back into a bull market because you're going to start to see FOMO and increased demand, and a lot more capital is going to come in, especially if we have crypto legislation in place. So I'm excited for the bull cycle once we get out of this bear market. And speaking of ETFs, the overall spot Bitcoin ETF volume today surpassed $2.4 billion with BlackRock leading, Fidelity coming in second, Grayscale at third, Bitwise at fourth, ARK Invest at fifth, and Morgan Stanley at sixth. So Morgan Stanley climbing the ranks here on the first day. All right, moving ahead. Circle rolls out USDC payments platform that lets users pay without holding stablecoins. This is an interesting one. Circle launched a stablecoin settlement service that allows payment service providers, fintechs, and banks to benefit from efficiency of using blockchain-based rails without having to hold digital assets like USDC. The platform is meant to facilitate cross-border settlement using USDC, help merchants accept stablecoin payments, and lower FX costs. So this is really great. It will help boost adoption. Obviously, they have to make sure everything is buttoned up, the reserves are there, and there's a one-to-one backing and so forth. I'm not saying they're not doing that. I'm just saying when you're going to have people do these things and they don't have to hold the assets, you got to make sure everything's copacetic, but this is pretty big and could really boost adoption of USDC. And, you can imagine the other stablecoin issuers are going to follow suit, and game theory is going to play out here. So this is dubbed CPN Managed Payments. The platform abstracts digital asset complexity, enabling partners to interact solely in fiat while Circle manages the entire digital asset lifecycle, the company said in a statement. So really big stuff here. Now, speaking of stablecoins, Polygon Labs is seeking to raise up to $100 million for stablecoin payments business. So Polygon, they have been doing a lot with stablecoins. There's actually a lot of transactions happening on the Polygon blockchain. I am a token holder, but I hold a small amount from a long time ago. But it looks like they're doubling down on stablecoins. So the blockchain company aims to raise capital by selling between $50 million to $100 million in equity in a new stablecoin payments business, according to the information. Polygon Labs CEO Mark Boreon will lead the new payments business, it said. So everyone's trying to grab as much market share as possible, folks. All right, guys, we got to end it on something that's interesting. Adam Back denies he's Satoshi Nakamoto after the New York Times report claims he's the Bitcoin creator. So the New York Times put out an article saying Adam Back is Satoshi. This seems like just recycled news some years ago and Twitter conversations and conspiracy theories, right? So I don't know why the New York Times is doing this now. It's just kind of strange. And, Adam Back, he went on X and said, look, I am not Satoshi. And the New York Times article argued he's the strongest candidate yet. But I don't think Satoshi is one person. I honestly don't think that. I think it's a group. It could be maybe Adam, maybe Hal Finney, and some of the early guys were all, Satoshi, so to speak. And I don't know. I could be wrong, but I don't think it's one person, honestly. But nevertheless, the quest to find who Satoshi is continues. And I think it's best that we never know who Satoshi is. Bitcoin's fine without us ever knowing that. And hopefully Satoshi never moves their funds, his, hers, theirs, right? Their funds, because nothing has moved from the wallets, which is good. And it just stays there and it's locked and it's kind of donated to the network, so to speak, where those assets, kind of gone forever because no one can access them. So we'll see. We'll see. Time will tell. There's a million, well, it should be less than a million Bitcoin left to be mined, and it'll be mined over the next 100 years. So it's going to be pretty crazy. This, when the final amount is eventually mined. And the next halving, I believe, is in April 2028. So we shall see how things go, my friends. All right, guys, that's the news. Leave your thoughts and comments below. Hit the thumbs up button. Subscribe if you haven't as yet. Please be sure to support the podcast by subscribing to my free email newsletter on Substack. I'll put out a write-up on Friday. Also, grab a copy of my book on Amazon. It's available in paperback and digital. And check out my course at mycryptocourse.com. This is a comprehensive course that teaches you everything you need to know about crypto. It is packed with tons of insights and it features expert commentary. No other crypto course offers this. So you're going to hear from builders, investors, CEOs, and many more. And right now we have a huge bear market sale. You can get 50% off the price of the course by using the code BEAR, BEAR at checkout. So once again, BEAR, BEAR at checkout to get 50% off. So go to mycryptocourse.com to learn more. Folks, thank you so much for tuning in. I appreciate you all, and I'll talk to you all later.